For this recording, sizobe sikhuluma nge-taxation. This is one of the topics discussed under e-finance. Okay, so taxation or tax, it's money that goes straight to the middleman, the guy who collects e-tax in South Africa, SARS, right? South African Revenue Services. Okay, so this institution is the one a collector le mali, right? Tax. This is the guy or the institution collecting a tax from people that are working or even businesses as well. Okay, so we're gonna be calculating this amount of money that is being collected by SARS over income. Okay, income. So whether that income is salary, whether that income is you own a business, maybe you are renting an apartments, that income is taxed, or any other source of income, that is being taxed by local SARS. We're going to calculate that amount of tax, right, that is being deducted from that source of income. Okay, so yeah, so discuss this topic. But first, let's discuss something, right? I try to come up with a summary of all the steps that you should know in calculating the tax amount due, right? The tax amount due. Sometimes we are calculating what? Tax. So don't get surprised in our calculator. It tax return. Tax return. It's another term, terminology for calculate for the tax amount. Okay, it's the tax return. So we're gonna be calculating that. So I came up with a series of steps as one landela whenever we calculate this tax amount. There's quite a few things that you need to take into consideration when calculating a tax. Okay, so first of all, you need the following. Number one, you need to find the gross income. Okay, the gross income. So we are sebenza for a particular company, you are earning a salary. That salary it's gross, right? It's the amount of money before deductions. That's your gross income. Okay, so gross income includes isn't as far salary or any other source of income, like maybe we content creator. Even now content creators are being taxed as well, right? It's something that was implemented sometime this year. We content creator, that's another form of income. So that income we told from whichever platform you are a creator for, that income gets taxed. After taxing, after taxation or after applying deductions, the money goes straight to your account. Okay, so gross income is all the money that you have before deductions. And then step number two, okay, before we head over to step number 2, let me just make a note la. Here's the note. With the investments, my savings interest are non-taxable unless stated otherwise. So check. You made an investment some years back, and then your investment, it grows in value. Then it starts maybe kicking back interest, or start giving you interest. So lama interest or from that savings, they are non-taxable, right? There are savings accounts where this is a non-taxable savings account, but the manyama savings account are taxable. But in a question involving a taxation, maybe the source of income is investments or savings, they'll state it's taxable or non-taxable. If not stated, just take it as non-taxable. All right. Number 2, you need to calculate deductions as well, right? As I've explained, utoli mali, that amount of money should that amount of money, it's gross, right? So that gross income, it's money before my deductions. What are deductions? I'm gonna put it on quote unquote. Deductions, it's all the non-taxable amounts, right? Isn't as nabo medical contribution. So the medical contribution, it's non-taxable, or it's a deduction that is non-taxable if you are over 65. Look, you're going to consider the medical contribution if the individual in question as calculated tax return for is over 65. Therefore, the medical contribution will be considered. If ever that person is less than 65, the medical contribution ayenzayo, it's not considered. Otherwise, so consult a table. But we'll discuss this over a question. Then another item that is a deduction, EUIF, right? Unemployment Insurance Fund. Last point is the pension fund. Okay, Lama deductions. These are non-taxables. That is why it's what deducted. That is why we are taking them out of iluganj gross income yet. Then after finding your deductions, you need to calculate what? The taxable income. The taxable income we calculate as taking the gross income and subtracting our deductions, all the deductions. Umawuthatha gross income, keep our deductions. What is left? It's taxable income. All right, don't worry. I'm just laying out the foundation. Then we're gonna take. I prepared 3 examples. We're gonna take 3 examples. Then we're gonna apply all these steps for each question. Next point, it's payable tax. So in order to work out iluganj tax that you're gonna pay over your income, you're gonna use a table. Which table? I'm sure by now you should be familiar with this table, right? This table, the first table, table number 1. You're gonna be using table number 1 to work out a payable tax. And then you can see you're gonna have threshold, gonna have tax rebates, but we're gonna discuss all of this. Okay, let's just discuss the steps that you should follow when solving our tax returns. Then it's about credits or our rebates. Okay, so the credits and rebates are actually dependent on age, né? And if you are paying or making contributions to a medical aid, right? The older you are, the bigger the rebates that are applied to a tax year, right? So in this instance, in our case, our rebates, they are also part of this table. Our rebates now, like tax rebates, you see them. Tax rebates, there's primary, secondary, tertiary as well, right? That is why the rebates are dependent on what? On age. The credits are dependent on there's only one credit that we're gonna be discussing. It's the medical tax credit. The medical tax credit table you're gonna use for only the person that is under 65 years, provided that that individual does make a contribution to medical aid. Okay, don't worry, we are still laying a foundation. We're going to take an example shortly, and then this one as well, you're going to use a table to calculate for the final one. A tax amount due. The tax amount due is the amount of money that goes to USARS. Okay, USARS, it's tax payable, it's payable tax minus our rebates plus our credits. That is how we calculate the tax due yet. That is why you need to follow these steps in order to get your tax due. Okay, but you'll see in other questions the steps are actually broken down into questions. Maybe in a particular question they might say calculate gross income. Next question, calculate rebate, deductions. Then in another question, skip number 3, but calculate payable tax, right? So I think it's a good idea ukuthi memorize lama steps now, so that you know the steps, like the framework in getting to calculate tax due. I promise you, in every question you're gonna follow all these steps. I'm sure of this. You're gonna follow all of these steps whenever you wanna calculate tax. But it doesn't stop here. So expand kancane ngithi, if there's a tax contribution made, bheka uSARS ufuna imali yakhe towards the end of the year, right? At a particular company that you work for, they also gonna take in a tax, right? So that tax oyibhatalayo that the company makes you to pay, but Leo tax that is being collected by that particular company, it also goes to SARS, ne? That is why we talk with him mhlambe uzwe someone at eshinkolo to SARS imali, right? It's because of the tax collected even less than the tax that is actually calculated by SARS, right? But it will make sense with the moment we start making doing our calculations, all right? So normally, or let me just say, in order to calculate ukuthi uyobhatala uSARS how much, or yena uSARS uzobhatala how much, there will be a case where mhlambe the tax that you are paying it exceeds the amount of tax that SARS requires from you, right? Then this difference will actually determine ukuthi when you get to pay SARS or SARS will get to pay you, right? So there's gonna be a problem where actually look, it's either when upatala SARS tax directly, or it's the other way around. The company will take imali and pay you SARS as a form of tax, but the money that your company takes must match the amount of money that SARS requires. Okay, I think in Kulume enough ngalama steps, right? But it's not like all of the problems solver they will want you to calculate the money paid or received. Okay, so ungawaring at this one, but if it comes, I'll also explain it. Okay, I'll also explain it. So Lena, I think we can hide this one and work on our first problem. So we're gonna be using this table. This table is for 2022-2023, right? I couldn't find the recent one or the latest version, so we're gonna be solving our problems with using this table, all right? But this table, of course, it's gonna be provided ku question paper yako. Problem number 1. This is our first example. This is our first example. So let's do this. At this one, yeah, it does mark. Maybe let me take white here. So Mr. Naidu is 66 years old and still working. All right, 66 years old and still working. Now, if 66 years old, if this person is making medical contributions, over 65, so it means that the medical contributions will be considered. But don't worry, we're gonna get there. Mr. Naidu is 66 years old and still working. His gross salary is 18,000 per month. He also received a bonus of 18,000 rand. The interest on his savings was 5,200. His contribution to a medical scheme was 2,000 per month. He has no dependents. Now, for this question, we have to find tax return. It doesn't say lapha ekugcineni, but I'm just gonna add it. Ngithi calculate his tax, okay, his due tax. Sometimes bangathi his tax return or something like that. All right, step number one, we have to find any gross income. Number one, let's calculate the gross income yakhe is equal to, now his gross salary is 18,000 per month. Yes, it is given, but calculations wakho, this is very important, calculations wakho, you need to work with annual amounts, meaning that lo 18,000 kwamele simthathe multiply ngo-12, right? This is the first income. You also received the bonus of 18,000, so it's gonna be 18,000 rand equal to, so there's also another form of income I told her, interest on his savings was 5,200. But what did I say? And B, interest or savings accounts are non-taxable. So this amount of 5,200 angeke sifake ku gross income ngoba it's non-taxable. Siyayiyekela yona. So le 5,200 uyoyithola injalo. That 18,000 ayithola per month, you multiply ngo-12 so that iba an annual amount. Then the bonus as well, see, I add up because it's a taxable amount. Let's find the total value, the total gross income. 18,000 times 12 plus 18. Okay, it's total 234. 123. So this is the annual gross income. We need to calculate the annual gross income. So find the gross income, which is the annual amount, the annual gross income. That is what I mean by we work with the annual amounts. Okay, so I see including that investment because it's non-taxable. Number two, so calculator ini ama deductions here now. Deductions are equal to his contribution to a medical scheme was 2,000 per month. See, multiply by 12 as well. We need the annual deductions, not monthly deductions, but annual. So it's 2,000 times 12. That's 24,000. 123 rand. Okay, annual deductions. It's 24,000. Bega, if Mr. Naidu was less than 65 years, lo 2,000 bengeke si multiply ngo 12. Okay, so I'm annual deductions now. But if they got less than 65 years old, maybe say 55 or 60 years or 64 years old, medical contribution yakhe we were not going to take into consideration. Uzobona with the next example what exactly I mean by the medical contribution. But the 2,000 multiply on 12, then we get 24,000. Now let's calculate the taxable income. So the annual taxable income is equal to it's 234,123 minus 24,000. This is gonna be equal to 234,123 minus 24,123. Then we get an amount of 210,000. This is the taxable income. Okay, taxable income. Number 4, sitholile gross, annual gross, ayithole annual deductions, ayithola ne taxable income. Now let's go ahead and calculate the payable tax. How do we calculate the payable tax? We consult this table. Now, if this is the taxable income, uzala ku table. On this table, you need to spot a bracket where this 210,000 is found. Like, for example, the annual taxable income it's 210, so it means that it's between 0 and 210. 0, the first bracket, this one, this bracket la, what 210,000 is between 0 and 22600. Okay, now sizothi-ke, we're gonna do the following. So it's 18% of taxable income, so we're gonna say payable tax, this is annual payable tax, is equal to 18%, start alo 18% divided by 100, si multiplying with 210,000 rand. So it's 18 over 100 multiplied by 210, 1, 2, 3. Then it's total 37, 800. So this is payable tax, annual payable tax, all right, annual payable tax. But as figanga ku answer, we haven't gotten the final answer, which is the tax due or the tax return. Therefore, komele sibuye calculate ini ama rebates. So the rebates are gonna be so consult the table ama rebates, this one. So I'm a tax rebates for this year, for that year. So we are now 66 years old. It means that we are tola a rebate ye primary ne secondary. So what the rebate is equal to 16,000. 16,425 plus 9,000 is equal to 16,425 plus 9,000. Mtola A 25,425. Right, so this is rebates. Rebates. Ama rebates wakela. So therefore, tax due is equal to payable tax 9. So this value 37,800 minus 25,425. 37,800 minus 25,425. Answer is equal to this 12,375. This is the final answer again. All right, in the question there's nowhere stated ukuthi he made a tax contribution. So the final point again, we're not gonna do this one. There were no tax contributions. So this is how we do example number 1. What to keep in mind, Lauti, we are working with annual amounts. All right, I'm gonna hide example 1. Let's dive into example number 2. Now, I took this example number 2 because usihle is younger than it's less than 65 years old. All right, so it's a different problem. Now we worked with an individual that is over 65 years old. Now Sihle is 22 years old and is a qualified chef. She earns 16,000 rand per month. keep in mind, we work with annual values or annual amount. So we need to multiply that by 12. And her pension contribution amounts to 15% of her annual salary. She is single and belongs to a private medical aid paying this much. Now, since we're less than 65 years, it means that a medical contribution it's not gonna be considered. The 1,200 I'm ignore, but instead we're gonna consult in a table. The company deducts 1,756 pay as you earn income tax from her salary monthly, right? So she's making a tax contribution on the side, okay, on the side. So usars uzofuna imali yakhe nakuphela unyaka. Then a company is also taking a tax from his salary yakhe. So when SARS comes, uzothi okay, the company yakhe ibhatala tax sharp, ubhatale this amount. Thina sifuna this amount. Nangabe I company yakho ibhatale over what SARS requires, SARS will pay you back the outstanding balance. But if a company patale less than what SARS requires for that year, it means when you should pay SARS another amount as well. But we'll get to that. Use the tax tables for individuals for this year. To prepare her tax return, determine her tax due for the year and calculate how much she would have to pay to SARS or receive from SARS. So there's two questions now. There's two questions. Let me highlight them. Questions. So the first question, Bati, calculator the tax due. The next question, calculator guti uzopatala usars how much, and calculator guti uzo receive how much from SARS. This is question 1, tax due. Question number 2, which is the last question, calculator guti uyopatala usars how much. Okay, now we're gonna have to start with step number 1. Number 1, find the gross income. So we're gonna calculate the annual gross income. Gross income is equal to, so she earns 16,000 rand. Yeah, 16,000 rand. We multiply that by 12. So is there any other income I told you? Nope. So this is gonna be equal to 16,123 times 12. Answer is 192,123. So this is how much is earning per year, right? This is how much is earning per year. Okay, so now, and her pension fund contribution amounts to 15% of her annual salary. Done with step number 1, sine gross income. Step number 2, let's calculate the deductions. Okay, deductions are equal to, there's only one form of deduction that is made la. Pension fund, which is 15% of her annual salary. 15 over 100 times the annual salary, 192,123 is equal to 15 over 100 multiplied by 192,123. So this is the deductions made. These are the deductions made, 28,800. So these are the total deductions. So there's only one deduction, pension fund. Yes, this individual is also making a medical contribution, but we cannot consider low 1,200. All right, we cannot consider the 1,200 as a deduction. Why? Because the person is not over 65. She's 22 years old. So the medical contribution that she's making on a monthly basis, it's gonna come as a credit. So you calculate it as a credit. So you add a number rebates, if that's the case. So for individuals less than 65, provided ukuthi wenza a contribution to a medical aid yakhe, the contribution won't be considered, but so some credits and see add the number rebates to credit the payable tax. Ne? So there's only one deduction, it's the 28,000. So snama deductions with tax income, taxable income number 3. Taxable income is gonna be equal to, it's the gross income, which is 192,123 minus 28,800. Let's check it out. 192,123 minus 28,800. So this is the annual salary, 163,200. Right? Done. Let's calculate the payable tax again. So number 4. Payable tax. Siyahamba. So check. Sizala. Alright? Sizala. So the tax threshold is saying, Uguti is saying to us, this person or this individual is actually gonna be subjected to a tax. Ngoba she's under 65 and earning over 91,250. So she's liable for tax law. Alright, but enough about the tax threshold. We're gonna consult the table yama tax. So she falls in the first tax bracket because income yake is between 0 and 226,000. So that is payable tax. Payable tax is equal to 18% over 100. It's 18% of the taxable income. In this case, it's the 163,200. So 18 divided by 100 multiplied by 163,200. Then in Tologoti, the payable tax is 29,376. Number 5. My credits nani nama rebates. Let me use a yellow for this one. Credits and rebates. Credits and rebates. So sizotige, this is equal to, how old is she? 22 years old, right? So it means that rebate yake, it's gonna be the primary rebate. Okay, it's gonna be the primary rebate. Ngoba she's less than 65, so the secondary, it's between 65 and older. But ngoba she's less than 65, so we're only gonna consider the primary rebate. So it's 1642. Where was I writing? Okay, perfect. So it's 16,425 plus. She is 22 years old and is a qualified. Okay, look, she's making a contribution of 1,200. That is why asim concede, we don't consider the 1,200 ayenza per month. But she's under 65 years old. Okay, so instead we're gonna be using this table, the medical tax credit rates for a person making contributions to a medical aid. Okay, so let me hide. Alright, so since usingil agana bantwana, right? So it means that maybe nanga 70 green. So now we dealt with iloganj ama rebates. Let's talk credits again now. So going back to this table, we can see that kutama credits wakhe nawala. For the taxpayer, if she's making a medical contribution, she's gonna pay this much, or she's gonna receive a credit of 347 per month. For the taxpayer, if begana bantwana making a medical contribution, she was gonna get another credit of 347 per month. But now, since we only deal with annual amount, so we're gonna take this 347. Can you check one more time? 347, you multiply by 12. This is for the medical credit. She is making contributions to medical aid plus 347 times 12. The answer is 20,589. So these are the credits. So therefore, step number 6, tax due. Number 6, tax due is equal to payable tax. Payable tax will 29,000. 29,376 minus rebates and credits, which is the 20,589. 29,376 minus 20,589. So this is the tax as we battle 8787, 8,787. So this is the tax amount due. So we just answered point number 1, question number 1. Now let's find out ukuthi uzobhatala uSARS or uSARS uzobhatala yena ke, ne? So for the last one ke, maybe we can say amount due to SARS or to be received or to receive is equal to, okay, is equal to. But first, kuzofuna ukuthi sicalculate the payee, pay as you earn tax. Payee tax is equal to what? Is equal to 1756 times 12. 1756 times 12 is total 21,072. Okay, so usihle i-tax ayibhatalile, it's this much through i-company yakhe to SARS. Okay, then uSARS uyabuya uthi mina as SARS, this is how much I want. This is how much I want. Ne? The tax due is calculated. It's what SARS want. This is what SARS wants. Sihle paid this amount of money, so it means that she overpaid ulogai uSARS through the payee company tax system. Okay, so it means that's what the 21,072 minus 8,787. So angeka bhatale uSARS, but uSARS will pay usihle how much? 12,285. So this is how much she will receive from SARS. Okay, let's take one more example, just one last example. This one is coming from a question paper. I don't remember which one. Was it, but anyway, so you know, Miss Vilakasi is a 51-year-old widow with 3 children to look after. Her only sources of income are a monthly rental payment of and an investment income, which is 1% of a rental income. So there's an investment account. An investment income, an investment. She equally makes a pension fund contribution of 3,000 rand monthly and a monthly payment of towards tax, as well as a medical aid contribution of monthly to cover for herself and the kids. How many kids? 3 kids. Given below is the individual tax rebate obtained from SARS for the year 2023. It's this table. They're going to provide it to you. For the first question, calculate Miss Vilakazi's annual taxable income. Annual taxable income. It's step number 3 ule table yetu. Alright, it's step number 3. So to work out the taxable income, we need to find the gross income as well as the deductions first. Okay, so to answer 5.3.1, we need the gross income first. So the annual, it's always annual gross income is equal to, it's the 85,000 rand multiplied by 12. There's another source of income, it's the investment account, but I did mention the investment or savings interest are non-taxable, so that investment won't get taxed. So that 1% investment, it's not gonna be targeted by SARS for paying tax. So we don't consider it to go gross income. Whatever go gross income is a calculator, it's only the salary or source of income that is taxable. The investment in this case, it's not. So 35,000 times 12,220. 1, 2, 3, 420,000 rand. Okay, so we now have the gross income. Let's work out our deductions work again. So there's only gonna be one deduction. Her only sources of income are a monthly rental payment of 35,000 and an investment account which is 1% of her rental income. She equally makes a pension fund contribution. So there's one identified deduction la. It's the pension fund. Iyaqhubeka ithi a monthly payment of 4,500 toward tax as well as a medical aid contribution. So we're not gonna consider her medical aid contribution. Why? She's under 65 years. So that 2,005, it's not gonna get considered. But instead, for the fact that she's making some form of contribution to medical aid, we're only gonna consider in the table yama medical credits. So a calculator lapakma credits, not here kuma deductions. Alright, then we continue. City ama deductions wake are gonna be equal to 3,000 times 12, 36,000. Our annual deductions now. Okay, so taxable income is equal to 420,000 minus 36,000 equal to 420,123 minus 36,000, 70384. 123 384 123. Okay, then let me just store up that value la. Then it's 384 123. That's the answer la. Okay, next question. 5.3.2, calculate Miss Vilakazi's annual tax liability after all deductions. Nice, very nice. So for the first question, they made us jump only to calculate to step number 3. So for the next question, they want us to calculate the due tax after all deductions, which deductions lama credits na lama rebates. So we need to start off by calculating a payable tax first. All right, so this is the taxable income. See, calculate it 5.3.1. Let's use the taxable income to calculate the payable tax. So the payable tax is equal to 384,000. Ufola under which bracket? 384. That's bracket number 3. It's this bracket. 384 belongs within this range, so it's gonna be bracket number 3. All right, so 73. It's what? Oh Lord. Okay, yeah, we're gonna write Lana. So it's gonna be 72726 plus 31. 31% of, which is 31 over 100 of what? 353,100. 353,100. So it's gonna be 384,123. Subtract this value. Subtract which value? This 353. So it's gonna be the amount we calculate here, the payable tax, the taxable income, minus whatever value we told. All right, 353,100. 353,100. Close bracket. Then 73726 plus 31 over 100. So it multiply by 384,123 minus 353,100. My answer is 83305. So this is the payable tax, but we want the tax due. Let's calculate my credits and rebates. Let me use yellow for this one. Credits and rebates. It's gonna be what? Credits and rebates. Come on. I'm telling you, rebate. How old is she? 59, not 69, 59. So she belongs where? On this bracket. So sifuna a tax rebate. So she's under the primary value, which is 16,425. That's the primary rebate plus some credits again now. Okay, for the credit, now let's go back. Let's back up a little bit. Yes, this person, EP problem, Nyla. Let me underline using a rate. It's important that I highlight this. And as to why she calculated credit, just to reiterate, she's 69 years old and making a monthly contribution of 2,500 rand to cover for a medical aid for herself and the kids. How many kids? 3 kids. Okay, the 2,500 rand, it's not gonna be considered as a deduction. Why? She's less than 65 years old. Now ISARS is okay, she is making a contribution to a medical aid. Therefore, instead of calculating the contribution on that 2,005, what will happen instead is we're gonna use the medical credits table to calculate my credits work. So we're gonna come back sibabale bonke laba covered under that medical aid. All right, everybody covered under that medical aid. Ubani nobani, it's 3 kids. So kuzoba nguye for the taxpayer, kube for the first dependent, which is child number 1, kube for each individual, for each additional dependent, which is for the second child and the third child. So to calculate this, I'm gonna go back la. I'm just gonna go back and say 347. By saying it's 347. Yeah, 347 number 1 plus another 347 for the first child plus 234 for the second child plus 234 for the for the third child. Back lana nguye uloka Miss Vilagazi. This is Miss Vilagazi. First child, second child, then for the third child, according to that table. But we're gonna have to multiply all of this by 12 as well. City times 12. Why am I multiplying by 12? I'm multiplying by 12 because on the table these medical contributions are actually calculated. They're actually calculated using they are calculated per month, and we are working with our annual values. So the 16,425 plus 12 open bracket 347 plus 347 plus 234 plus 234 close brackets, 30,000 369. So this is the credits. These are the credits. Now therefore it tax due, point number 6, step number 6, tax due. This is equal to tax due. This is equal to the 83,305 minus the subtract analama credits and rebates. It's 30,369 equal to 83,305 minus 30,369. Total 52,936. This is the tax due. Now 5.3.3. Okay, I think 5.3.2 na tax yakhe la, it's 52,936. I'm gonna hide this and calculate 5.3.3. Calculate how much Miss Vilagazi must pay or receive after her SARS assessment. So SARS is okay. So collect the tax manch. So collect the tax. As calculate ukuthi lo muntu uyothola malini or thina simkolo. So asum assess and find out ukuthi usikolota malini. Look, i-tax yakhe siyitholile through the company or through ilokai operation yakhe lapha. Also Tina, we also need to calculate for this particular year, for this particular year, how much we need. Ne? If upatale over siyompatala the difference. If yena upatale less than the tax upatale less than what we want through the tax contribution, therefore should be a scored. Let's calculate this thing. So she equally makes a pension contribution of 3,000 rand and a monthly payment of 4,500 rand towards tax. So we're gonna say paid annual tax, lama monthly contribution. Paid annual tax is gonna be equal to 4,005 multiplied by 12. Then go out 54,000. 1, 2, 3. 54,000. So this is how much tax you paid during the course of the year. All right, during the course of the year. So this is how much she paid. This is how much SARS wants or requires. Therefore, I think it's obvious with lana man SARS this is how much she paid SARS. And SARS udinga this amount of tax due. So taking the difference between the two values, 52936, SARS uyamkolota how much? 1064. Now for the last question, calculate Miss Villagas's net monthly income. Net income is gonna be equal to all right, that's gonna be a task for you. Right, just type in the comment section the answer, then I'll correct if incorrect or wrong. Okay, I hope you enjoy this lesson for today. Ngakhohlwa ukulike, ukushare nokusubscribe. So yeah, I'm gonna catch you on the next recording. Bye bye.